Let's go. Can y'all hear me? Can everybody hear me?
Yes.
All right. So, um, tonight we're going to
Yes.
talk about dividends. Um, one of the things about dividends you need to know is basically there are five important dates that you need to know. Can y'all see this? What you got on your screen? Yeah, good. How do I get rid of this? Okay, the declaration date, the ex. Well, basically, everybody know what a dividend is. A dividend is kind of like an interest payment. The company will tell you that basically it's kind of like the interest rate on a loan. So it's paid either monthly, quarterly, or yearly. So it says form of a cash distribution that is paid for the company's earnings to investors. But basically, there are four dates that you need to be familiar with. The declaration date is not that important, but the declaration date usually is 2 weeks to a month before they actually pay the dividend. They have to announce that they are going to pay the dividend. And so a lot of times people wait on the declaration date because companies may be in bad shape and actually don't pay it. And they also tell you how much they're going to pay and what day they're going to pay on. The most important part is the ex-dividend date. The ex-dividend date is the date that they decide who actually get the dividend. So you can have a stock that you bought a year ago. You can have a stock you bought 5 years ago. You can have a stock you bought last month. It don't matter how long you had the stock. If you do not hold on that stock that one day, you will not get that dividend. So if the ex dividend date was the 30th, you have to own the stock the day before the 30th. If the F dividend date is the 25th, you have to own the stock at the close of the 24th. You can't own it on the 25th. I mean, you can keep it, but I'm just saying you can't buy it on the 25th. You can if you bought it on the 23rd and sold it on the 23rd, you do not get the dividend. It's got to be the ex dividend date is X meaning one day after. And so whoever owned that stock at the close of the date before the ex dividend date, that's who get the dividends. And the record date is when it's what they record who all had. They go in and find out who all had the stock. That's the record date of who gets it, and then the pay date is when they actually pay the money. So if you look at, and you can Google this, but definitely understand the ex dividend date. Everybody got that? So if you look at this stock here, CIM, the ex dividend date would have been 12/29. So you had to own the stock on 12/28. Um, so the way a dividend work is, I need to figure out which stock. There are dividend that pay every month. That means every month they pay dividends. Like um, like this one actually tells you the dividend is monthly, whereas Fidelity tells you that um, I had on ARR.
You have to hit the dividend over there.
Fidelity actually tells you that the dividend is like on Fidelity. Tell you the ex dividend rate is 312. This is a stock called ARR, and on here you don't see it that I know of. But this is a stock that pays dividend every month. Most stocks pays dividend 4 times a year, every quarter. But this one pays every month. So you have to really be careful. The year would be the same. The year is how much you pay in a year. But you have to be careful with the amount of money you're gonna get because they'll tell you what the dividend is, they'll tell you the date, and they'll tell you the year, and the math won't add up because they pay every. This is a monthly stock, so you have to say, okay, how much does this stock pay? 10 where it said this stock pay 10 cent. That don't, and when you're thinking quarterly, That sounds only like 40 cents a year, but it's actually paying $1.20 if it's paying every month. So it may not actually on this one. Unfortunately, don't say different ways. If you let E-Trade, it tells you it's a monthly dividend and the yield is 9.85 and it pays 10 cents every month. But that comes out to be 9.85% every year. Y'all understand that? So dividend stocks, this number right here will change almost every day because as the stock goes up, because the how much it pays is gonna stay the same. So if this number is gonna stay the same, if the price go up, the percent of the dividend goes down. If the price go down, the annual dividend rate goes up. So you may look at it today and it may say 9.85, and you may look at it in 5 days and may say 9.75 because it changes every day based on the math of the yield, the price of the stock, and the amount of money and that monthly payout. Um, if you look at a quarterly stock, what's this BBDC? Got any questions?
Can you hear me?
I can.
Oh, let me mute myself then.
So this is a quarterly dividend stock paying 7%, which it pays 19 cents a quarter. And on this one, if you went to E-Trade, they should basically match up. That may be a give or take a little bit off, but basically it should be about close to the same thing. So basically, when you're looking at a dividend stock now, what people don't realize that in dividends, um, there are two kinds of stock. There's a growth stock, which pays little or no dividend, like a Tesla or a Google or Apple. Those stocks are designed to shoot up. Microsoft is in that category now, but years ago when Microsoft was 30 something dollars, they had great dividends. But after their price got to hundreds of dollars, they stopped paying dividends because people buy the stock for the growth, not for the dividend. But in general, if you think about your state retirement plan or the average job retirement plan, it's basically based on 4% interest per year. So when you look at CNBC and some of the news stations, they believe that any stock that's paying 5% is a great dividend price. So what you think it ain't worth the time, the big companies, the big boys believe that 4 or 5% is a very high dividend yield. They would be satisfied with getting 3%. Personally, I say, why waste my time? I look at the higher dividend stock. So you can go to sites um, and Google dividends. Like I gave y'all, I think, a link called Dividata. Um, Dividata.com. Y'all see that? And it'll go in. It'll tell you which stocks are about to release dividends based on the ex-dividend date. So you can see whose stocks. It'll tell you, like this is March the 12th, which is tomorrow. So basically, if you didn't buy the stock today, you won't get the dividend. But then it'll go down, it'll say March the 13th. And they got a lot of stocks to do, but this is just one. They um they kind of rank them. I didn't go in and Google what the rank was, but I'm pretty sure 4 is better than 3. Um,
Okay. Oops. Crazy question.
Go ahead.
What determines how much the dividend pays?
The company determines how much they pay based on
Okay.
how much profit they get, right?
Okay.
So a lot of the companies that paying 8, 9, 10%, they paying 8, 9, 10% because that's how they get their customers. Most of those companies either they're out either investing in other companies. They don't have a real business. They go out there and find other companies that probably paying dividends, and they try to average where they can make more and pay you a percentage of them. Like me and Debbie used to always talk about PSEC been paying a lot of dividend for a long period of time. So I it's basically based on their earnings. So they pay you a percent of their earnings, and if you were a conservative person and you were getting 1% or less than 1% in the bank, you would probably take chance on a stock that's paying 5% dividend, because that's like 5 times more. So that's what a lot of people do. Instead of putting their money in the bank and they sit there and they get a little bit of nothing, they buy a stock that the stock they buy may not move that much, but they're guaranteed that 4 5% dividend. That's why a lot of people buy dividends. They don't expect to buy a stock at $5 and see it go into 6 or 7. It may, but they don't. That's not what they're buying it for. They're buying it at 5 or whatever dollars and hoping it don't go down for 2, 3, 4, 5, 10 years, and that the average price, that if it goes up and down, that it still stay around $5 or $6. And then in the end, they be done got a whole lot of money, 10%, 5% a year off the dividend. Um, there's a term called DRIP, DRIPS. Um, DRIPs are called dividend reinvestment program. So what it does is, instead of they giving you the cash money, they take that money and they invest it back in the company, and they give you partial shares. So over a period of time, if you had like a stock that was paying 10% dividend, every 3 to 4 years, your number of shares would double because of the rule of 72. So in the end, you would say after so many years, you could have 2, 3, 400% more shares. Even if the stock dropped, you don't have to get back because you got way more shares now. So that's why a lot of people buy dividend and they reinvest it back into the company. They don't get the cash out, they let it reinvest it. And so that's why people buy dividends. Um, like I said, I went over the dates. And a lot of times, if you're going to buy dividends, and this would be a conservative thing in an instance, there are plays, but you're mostly buying it for buying a stock, holding it. It would be good to say, instead of just taking my one person advice, I would say, hey, I'm thinking about buying stock, BHV. What y'all think about it? And let other people go in and say, well, I don't like it because it do this. I don't read a lot. There are people that love to read. Some people might look at the chart. Some people might say the dividend rate is too low. Some people will actually say the dividend rate is too high. The higher the dividend rate, the riskier the stock usually be. The CLMs, the stock right here, I've had this stock off and on forever. The chart on this stock was always straight down. I mean, not quickly straight down, but over a year, it would always be a negative. The stock would always start and end at a lower price. It pays a very good dividend, but you lose some of the money on now. It's probably going straight up now because everything went down. But because the dividend rate is so high, the chart is a downward slope. But you hope it go down so far and turn around and then get midway back and you make a lot more money. It's kind of hard to understand that you want the stock to go down because you get more shares, but it pays CLM and CR, those two cornerstones right there, those 14.6%. Those two stocks pay a lot of dividends. But if you went and looked at a chart of CLM, a year chart would look good because it's straight up, right? But over a period of time, if you looked at it for like a 5-year chart, it would always be down. This is when the market crashed in March. But those two stocks gonna have a real bad downward slope. But it actually will come out ahead because if you bought it and it popped back up, and then you can make a lot of money just in that one drop over a long period of time. Another thing, this is I wish I had one that didn't. You're gonna every now and then you're gonna see a stock that pays really, really high dividends, like 20 and 30%. Normally they say that when you do, we're gonna go over a screener and show you how to find dividends. But normally they say stay away from the stocks that pay real high dividends because they don't pay it consistently. I don't know if I hadn't figured out how to do it in Fidelity yet, but in eBay, in E-Trade, they got a thing where they show you every month if they paid dividends. So you can go back and see if there's a big gap. So I don't know. I don't know of any stock that's super high now, but you'll see some that's got like a dividend. Deborah, you remember one that was we went over that hadn't paid in like years?
Do I remember it though? I know we went over one.
So
Hold on, I'll look at my list. And also, if I can say, Fidelity does show that. It's just that you gotta click on
dividends
one of those little things in the menu. Yeah, dividend.
right here.
And yeah.
Yeah, and so they'll
Okay, and then yeah, detail would tell you. Then you scroll down.
right. Okay, yeah. So it'll tell you the should be the date of the month. And so if you see something that don't pay on a regular basis, you're taking a chance if you just gonna hold it. I usually just stay away from it, because they may or may not pay, or that's usually a bad sign that the company ain't doing that good. They offer that one-time dividend to help their executives, or to just get your business right then and there, and then the stock gonna drop real hard. I wish I had a stock that was very expensive. Let's see. So why are we here? If anybody that has a Fidelity account, I might have went on this before, but Fidelity got a very good screener, right? So if you say you can go to some websites and you can find a dividend stock, a website, an option website, or whatever. Fidelity got a screener. So if you went to Fidelity, and you can get a free Fidelity account, go to news and research, go down to stocks, and over to the left, and you'll see stock screeners. So if don't nobody know what a screener is a bunch of criteria you set to say, here's what I'm looking for. Show me, say, all the stocks under 50 and over 10. Show me all the stocks that have options. Show me all the stocks that pays dividend. Show me stocks that pays dividend that's over 3%. You probably can even say, show me stocks that's got a certain PE ratio, a certain EPS, a certain beta, a certain whatever those criteria are that was on that. For the ones that seen the chart that was on the original chart. But you go in, you can start your own screener. If you got an account with Fidelity, you get to make your screeners, and you can save them so you don't have to type it in no more. So like on here, I had this one evidently was dividend and options. This one was the one that the dividends coming up, I guess, monthly. So I prefer stocks that have dividend and options, so as y'all can see. But if you did your own screener, you could say start a screener, and then it'll give you a bunch of criteria over here. And so you see one right here that says dividend yield. So if you said you wanted to find something with dividend yield, you would click on dividend yields, and it will tell you I have more than one criteria. Yeah, it says it's got 15 criteria. And so you'd have to go down there and look at all those criteria to see if there's these are the 15. That's just for dividend. I mean, you got 11 criteria for the basic company. It says 8. What did I click on? It says it got 8 criteria, which is 8 things you can check. Earnings. So these are some of the stuff you can search on. You can search on technicals, analysis. Usually you search on price, but if you went in and said just the yield, you see where it says very low is 1%, low is 1 to 1, almost 2, and high is 2 to 4, and anything above 4.1. This is just dividend. This is just Fidelity view. Everything above 4% is considered high yield, and it tells you here that it's 414 stocks. That's very high, and it's basically 5,246 that have no yield. Now I know something's wrong with that because it's way more than 7,000 stocks in the stock market. So I'm not sure why it's not showing every stock in the stock market, but Fidelity may not have a 100% list compared to some others. E-Trade don't have a good one, and what's the company? Robinhood don't have a screener at all, and I don't like E-Trade. But either way, if you said show me one that's real high, and you can say, okay, I don't even want to mess with 4%. I want to go with nothing but 8%, right? And if I said I want to see everything that's 8%, that number would drop down to like 100 and something. So that's what the screener does. You go in, you play around with these criteria. You may not know what they mean, but you ain't gonna be able. You're gonna have a hard time looking at 500 stocks. You're really gonna have a hard time looking at 100 stocks. But I have had uh, a screener that gave me a list of 600 stocks. So and I spent all weekend looking at the chart on all 600. So, but that's what a screener does. You go in, this dividends, you find out what you want, and that's how you do screeners. Any questions? Take it as a no. Um, there is. I did not save it. But there is. You can Google dividend calculator. I know how to spell. And there's plenty of them out there. You can just go to anywhere, find a dividend calculator. You can put in the price of the stock. If I put $100 in, if I put $1,000 in at $10, and I got this percent, and it would tell you how much you have in a year, 5 years, and you can kind of see. There's plenty of them out there, but you should go to a dividend calculator and see if that's for you. It'll tell you how long it take your money to increase, double, or whatever. And so that's a very good tool to look at. And then I'll email this to y'all, but drips, some of the stuff that y'all can YouTube or Google or check out. But yeah, the dividend calculator, it'll tell you, I don't even know what's in it, but it'll tell you how long it takes, how much money you'll have, and you can compare it to, ain't no use even trying to compare it to a bank because, like I said, a bank don't even pay 1%. One other thing that I didn't tell y'all is, I wish I had a stock that pays huge dividend. What was that stock? IEP. It's claiming it's paying $2. But one thing that you can't see on a chart, and they don't really tell you. So when you see a stock that's paying a dividend, like um, this stock can't claim it's paying $2. Y'all see that? Can y'all see this stock where it's paying $2 on March? You got to own it on March the 24th. What people don't know that if you own this stock on March the 24th, you will get $2 per share. Right? The stock costs $60. That's 13%. So that's pretty dang good. But on March the 25th, if this stock didn't move and this stock was $60.86 on March, closed that on March the 24th, and that's what you paid for it. On the next day, the next morning, 9:30 on March the 25th, this stock will open up $2 less. It would open up at $58.86. So whatever you make on the level or on the day before the ex-dividend date, that stock reduces that amount on the price overnight. So if you make $2, so that means you can't buy a stock on the day before and sell it and think you're gonna get over it because the stock gonna open up the same amount that they paid you on the dividend. So a lot of people thought that they could just buy the stock, get the dividend, and come back and sell it. No, as soon as you make that $2, the next day you lose it right back. So if you know that in your head, that's why monthly dividend don't really matter because you get them every month. But if you know that in your head, you kind of say, I ain't used to be rusting that trying to buy a stock right before the dividend because chances are that stock, like see this stock here, it done shot up already. Right before the dividend, well, it's got a whole another 2 weeks, so it's probably gonna keep going up. But that's one thing to think about, that you're not really getting over. Pretty sure millions of people done tried by buying it right before the ex-dividend day. You're gonna lose it right back the next day, and it's probably gonna go down after that. That's about all I got on dividends. Unless y'all got questions, like I said, you can go in to a bunch of sites and make your list. You can get it. There are certain sites that you can actually, the screener on Fidelity, you can actually, it'll download it in a spreadsheet when you and get those. But they there are different sites that you get that will this may not the Fidelity one may not have the ex dividend date on it, but I know when you do it, when you do the download results, it's gonna ask you what criteria you want. When you do any screener on Fidelity and you say download it to a spreadsheet or whatever, it's gonna ask you, do you want to search or do you want the basic facts? I normally just check them all, and they put them on different tabs on the spreadsheet, and the ones you don't need, you can just did it disconnect? Are y'all still there? It's about,
Nope, we here. Here.
it's saying our 40 minutes are almost up. But anyway, so when you do the download results on Fidelity, just check all the boxes off, and then you might see you might not want some of them, but at least the basic facts. And then you'll get one of them you may have the dividend on one sheet, and the other one you may not have it on another sheet. But I like dividends because that's on the conservative side. I take stocks and I do my screener. If you looked at my screeners, a lot of them got dividend and options. So I'll do a stock that's got dividend and options so I can buy the stock. Which, if anybody know about options, which y'all will learn about later, you got to buy 100 shares. So it's kind of like you can't have $100 stock. Well, you could, but I can't. $100 stock, 100 shares is just out of my league. But I'll look at stocks that's got dividend and offer option and see if I can play the option based on the ex-dividend date. But that's a strategy. You got to actually learn the basic before you work on a strategy. So it kind of don't make sense to go into that. But the good thing about it is to play around with Fidelity. And so this one that I saved brought it down to 31 stocks. So I can go in here and say, chances are these are stocks that's got dividends and paying pretty good money. Like that was paying 86 cents. That was paying $1. And I can go in and say, can I play the options? But that's really for a different time. Right, Deborah?
Yes, sir.
All right. Any questions? Just going to cut off. I can restart the meeting if y'all want to talk some more. Got any questions?
Yeah. So should we be looking for stocks that pay dividends monthly or quarterly or yearly?
Well,
Does it sound like dividends that pay monthly is better?
Well, no, dividends, the first for me. Now everybody got different things now because there are stocks that grow, the price of the stock grow, and the price of dividend might be lower, but your price of the stock may go up. So you got to kind of put it out. For me, the first criteria is the percentage rate. So 10% is 10%. So if a stock is paying 10% and one is paying 2%, I'm not gonna put a lot of attention on that 2% stock. If my number one criteria is dividends. But the reason I say monthly dividends probably are better, the price don't fluctuate that much because people not trying to time it for that every 3 quarters, every 3 months. So when you got a quarterly dividend, a lot of people won't mess with it until that month when it's finna pay the dividends, and they try to time the best time to get in. So the stock may have did all kind of stuff for 2 months while you waiting. Whereas it don't really, because they break the monthly up into 12 payments, the timing don't really help you. It's usually gonna go up and down a little bit every month. PSEC is a really good that went up lately, but PSEC was a good one to look at for a long period of time because it paid roughly 10% for 10 years. It dropped hard, but basically, if you were to look at we're gonna get cut off real soon, but I can start the meeting back over. Y'all want me to? But if you were to look at a real long chart, you'd have seen where it been paying pretty much steady, and this was after the drop. So you can't really talk about what happened after everything dropped real hard in last March. But if you looked at that period right there, and if you looked at one, it was paying 6 cents, 6 cents, 6 cents. It's been paying 6 cents for God knows when. When it got up here, I think it paid 8 cents. But then, right here, it paid 6 cents the whole time. That's like 3 years. So and it's probably close to where it is now. This was probably all 6 cents too. So because it only pays 6 cents a month, people don't try to go in and time it. They just get it whenever they think it's at a good price and just hold it. So like I think the ARR stock is another one that was kind of a down chart, but before it shot down, theoretically it's almost pretty much a 20 stayed at $20. Whether you got it here or you got it here, still yet if you look at the line of $20, it was pretty much steady until the crash. So now that stock, if you got it anywhere along here, if you in your mind you said it's sooner or later it's gonna get back to $20, that would be a growth stock and a good dividend stock. It's still paying probably I might be paying more than 10% now since it dropped so hard. But it's paying 9.85%. So ARR and PSEC, ARR is a very good stock now because it's down so low. Y'all still there?
I am.
Yes.
Yeah, we here.
Okay.
Yeah. So we probably only got but 10. It said ending. We got 10 more minutes.
Yes, I'm here.
But that was a good question though. Yeah. With dividend stocks, for one, you got to realize that you're not in it for the stock to shoot up. You're in it to collect the dividend. But I tell Deborah and others that if you bought a stock at $6, 10% dividend is 60 cents in a year. But if that stock went to $7, you've made more off the stock. So now the stock price becomes more important than the dividend. You should be considering, well, I wasn't trying to get a 60 cent, now I got $1. I might need to take my dollar and go put it somewhere else versus waiting around for the dividend and the stock drop back down. So yeah, you're in it for the dividend, and unless you do research and you know this company in and out, if the stock price shoot up or if it drops, you have to reconsider the dividend value versus the price of the stock. I had PSEC, and I got out of it. I didn't have 100 shares, but I had it for a long time. I had it in my stockpile account, and when it went to over $7, it was almost close to $8. I got out and said I'll wait till it drop back below $6 and buy it back. Even if it take a year to drop back below $6, I would just wait and buy it back. So yeah, dividends is something that, like I said, and it's great for people that can't watch the stock market all day because you're not really able to just sit in there and quote trade. You can buy a stock, hold it, and you basically watch it once or twice a month. You know, you're in it for the long haul. It's not something that you think you're gonna make a lot of money for in 6 months. That's not what you buy dividends for. It's for the long period. Actually, you really think of dividends as something you're gonna hold for 3 to 5 years, unless the stock price just totally shoot up or shoot down. You just sit there and just let it ride. Good question. Y'all still there? They trying to extend my meeting. It's good.
Yep, we still here.
Any other question?
Here.
Any other question? There was something I did. I went over the calculator. I went over drips. Yeah, I went over the fact that the dividend date that it drops after the day after. Go it alone.
A question.
Uh-huh.
Okay, drips. Is that something that we look, is that, do I Google drips to find the stocks that offer that?
No, you Google drip to get the explanation with it. Basically, I can tell you in short.
I know what it means.
Yeah,
But
drip.
that's what I'm trying to figure out. How do I figure out which ones will automatically do that for me?
Okay. Drips are usually have to be over $5. So any stock that pays dividend, I ain't 100% sure about Robinhood, but Stockpile, Fidelity, E-Trade, you have to tell them to enroll that stock in the drip.
Okay.
You have to go in and actually
I
tell
thought
them.
it was something. Yeah, I thought.
So,
okay.
But I think the criteria has got to be over $5. Long as it pays dividends, the company, your broker decide whether or not they'll allow drips or not.
Okay.
And I don't.
Got it.
Robinhood do so much different stuff. I don't know if they want to mess around with. They do fraction of shares, so I don't know why they wouldn't.
Yep.
That's more money.
I got to find out, does Fidelity do that?
Pretty sure Fidelity would. They're pretty.
Okay.
But yeah, basically you go in, but you have to actually tell them that you want this I think Stockpile and changed to where you can say just do everything that you buy and automatically do it because they are made to where you just let your stock sit. But E-Trade, you have to go in and actually check and it'll tell you these stocks are eligible.
Mhm.
You can check them and say, okay, reinvest that or not. That's a good question because you lose a lot of money. You lose a lot of money if you buy a stock and hold it and it's not in drips.
Right.
So yeah, that's a very good question. Another thing to do is too though, if you're filing dividends,